It's going to be a while before the new constitution really takes effect, where we're looking at the creation of a governance platform. It's already working to boost some investor confidence in the market. So what's your outlook in that regard, and the kind of participation we'll be seeing from foreign and local investors, where we know foreign investment had dropped by 72% in the second quarter?
I think quite clearly it's a game changer. The issue that was swirling around us was the political risk, which flashed red from 2007 into 2008 and 2009. And I think the passing of this new charter is actually a game changer and a tipping point in terms of political risk. And you're actually moving from flashing red to flashing green. And I think investors are going to continue to warm to that new departure. And you've probably got another 20 to 25%, I think, of a rally in the stock market into year end. I think domestic investors are heavily overweight bonds. I don't think there's much more juice left in that transaction. I think they've got to come into the equity market in a big way, but our local institutions tend to be a little bit bureaucratic. They probably held their meetings on Monday. They'll probably set some prices by Tuesday. By Wednesday, they'll see the markets a long way ahead of them. They'll reset the prices. So it tends to be a little bit drawn out. But I think we're in a sweet spot here with a lot of impetus into the year end.
Well, talking about impetus, it's those banking results that's provided some. Drilling down into some of those numbers, CFC Stanbic posted a 58% jump in pre-tax profit for the half year ended June. Recovery in economic growth, which is spurring some growth in its loan book, and fees and commissions really standing in the spotlight. What are your overall impressions there?
Well, I think, they threw everything and the baby in the bathwater into the results last year. They've got a clean slate. You're seeing a strong operational rebound. They are going to separately list the insurance business, and I think investors are very keen on that. And you've had a tremendous response to this shareholder extraction roadmap they put out there. From March 9 to today, I think we're up about 120% in the share price, and a few performances like that. So I think there's a very clear roadmap. There's a lot of high value real estate in the business, and it's all beginning to gel together much more efficiently. And I think the price will be well supported around here.
Well, with that being the case, interesting to note is the fact that we have had banks starting to slash their interest rates, and Barclays Bank has been one of the latest to go down that route. But where that comes to the fore, an upping of the volume of loans would be expected, compensating in a way for the slashing of rates that we've seen come to the fore. Is that any concern for you in the market about the quality of loans moving forward, Aly Khan?
No, I'm not overly concerned with the quality. I think, high GDP environments tend to float a lot of boats. I think we've got a lot of good headwinds behind us. And I think the banks, use this as an excuse to keep very, very high margins. And I think the point is coming when they've really got to slash their rates. And that point is an inevitable point. So I see volumes growing, rates coming down, and banks having to make more money on the credit side of the curve as opposed to the government of Kenya's side, where they've actually made their windfall profits over the last 6 months by trading the bond market.
The big news out of CFC Stanbic is that it's being expected to separate its long and short-term insurance businesses to general and life insurance businesses, and I intended to list them separately as well. To what extent are you seeing this as the unlocking of value, and what kind of investor reaction are you anticipating with these IPOs coming to the fore?
I think CFC Stanbic is a classic case of a management on their toes, and I think a lot of corporate Kenya should be looking at the roadmap they've laid out. In particular, you had a lot of businesses bundled up under this one listing. The stock market was not efficiently valuing CFC Stanbic's share price. The management have taken action, and they've had a stunning response from the market already, and I think the market will continue to support the management in this. As you said, they're giving one share for every share held in the bank, and then they're not raising any more capital, because I think Liberty Life produced the capital for that insurance arm, and investors are actually applauding the fact that they're going to have the ability to extract value from the insurance part of the business.